In the year 2028, one Big Mac will equal $1 million. From the Gospel of John McAfee. Bro, just learn to code. The Project Freedom Podcast.
Boom! What is up, guys? Welcome back, Greg.
Josh, how are we doing, brother?
Good, dude. You know, this is episode number 80, and you've been, I think you were in the first, a couple of the first, 10 episodes, and then, halfway through, almost at 100, dude. So it's good to have you back, man.
Absolutely. It's good to be back. Thank you for having me.
Yeah, anytime, my friend. So tonight, we're going to talk about one of your and my both favorite subjects, the Fed, Bitcoin, and blockchain, et cetera, anything that encompasses all of that. But have to kind of be vague on how I worded that title, because I'm not going to be not going to, dude, honestly, bro, with all the silencing they're doing to people. And I'm not saying that they're I have a small channel right now, just 500 subs. I wouldn't expect them to specifically target me, but
you never know.
Yeah. And dude, I have people message me and tell me all the time that they'll sub and then they'll be unsubbed, or they'll hit the notification bell and then the notification bell gets undone, which is just and I've heard other channel and content creators say stuff like that too. And you'd think okay, that's a bug that's been going on for 2 years, that someone on the development team over there out of the 5,000 trillion developers that YouTube has would be able to fix that, right? But
in the world of software, they call that a feature, not a bug. I'm going to go with that's probably intentional.
Yep. Yeah, it very well could be. But of course, guys, we're just talking about the YouTube in a video game in Minecraft, not in the real world, because obviously the platform that we're on right now is amazing. And Susan W, she is she's one of my top 5 people on the planet.
Huge fan, very stunning and brave. I absolutely love it.
Yeah, yep, for sure. Okay, dude, so let's get right into it. So last time we talked about this subject, it was Halloween, and we actually didn't specifically talk about the Fed. I mean, we had that sprinkled in there, right? But yeah. Nothing at that point had really changed as far as maybe early summer, May, April, May, June, right? But in recent times, what has happened, a couple days ago, the Fed, after getting barked at enough times, had a meeting where they're hey, we're going to calm everybody down. So do you think you could explain to the audience exactly what happened in that meeting?
Sure. So, I mean, the long and short of it is this, and obviously the Federal Reserve of the United States it's neither federal nor a reserve, right? So it's a private banking institution, really more of kind of a cartel, if you will, that basically on behalf of the states here prints money for us, which, and of course they do this under the auspices of kind of protecting the value of the dollar. But as we all, I think, know in this space at this point that, they've really been increasing the money supply drastically over the last couple of years. So in the last couple of days here, we had the Federal Open Market Committee, the FOMC meeting, where Mr. Powell came out, the chair of the Federal Reserve, of course, for those that are not aware, and basically said what everyone expected him to say, because they had been kind of priming the pump with this in the media and mainstream media, various news outlets saying, oh, we think we're going to raise rates. We think we're going to, start the tapering. And so that was the news that we got. So basically the long and short of it is they're looking to kind of slow down their bond buybacks, and they're adding to the balance sheet here, which it's basically quantitative easing. So originally, when we started this quantitative easing way back a bunch of years ago, they said, oh, it's just going to be a one-time thing, and they make up these fancy terms for it. But basically what that means is we're going to print more money to accomplish what we want via monetary and fiscal policy. And so the markets, we can see, really kind of had already priced that in. We had that little pump earlier in the day ahead of the call. And and then they came out obviously and said after they start the tapering right into March, they expect that they may increase the interest rates, up to 3 times that year. So I think, if I had to guess, I think that's probably over the top. I would doubt that they would do that so aggressively. I think, you have the potential there if they were to say raise it like, zero point 0.1 or 0.25, a number of times. I mean, we could see a drastic impact on the economy, to slow everything down. Because, I mean, right now, the economy is really, truly fueled by cheap debt. I mean, obviously, a lot of people have been getting those 0% credit card balance transfer offers. Mortgage rates are at or near all-time lows. And this is fantastic for folks who want to borrow money, because when we're talking about taking out a loan for hundreds of thousands of dollars at just 2.5%, 3%, just to use the mortgage example, I mean, that's a good bet in my opinion. Even with the inflated housing prices nowadays. But you add interest rate hikes, and you're going to see a lot of that start to dry up very quickly, because people's opinions of the value of that debt over time, it's just not going to look as attractive to continue to take that out. But I think the second most important point to note here is that we do have, because the biggest problem right now is obviously inflation, Josh. I mean, it, I know it. We're seeing the gas prices up, 50% or whatever it is from the same time last year. It was, high $1 and change, and now it's kind of high $2 and change. And so, the price that we're paying at the grocery store is going up. Meat is, greatly increasing. We've got these kind of ongoing supply chains and labor problems. And with the whole situation that we've been going through with a certain sickness, we've really been kind of pushed into this wartime economy, if you will. Granted, this is a manufactured version of that, because this all ends, of course, once the powers that be kind of decide that it's ending, and they stop advertising on the media. And the reason I bring that up is because what we're talking about here ultimately is the velocity of money. And so, for those of you guys out there that may not be aware, the velocity of money is basically the speed of which cash changes hands between different folks out in the economy. And when the velocity of money is slower and you have inflation coming into the picture, you're not really going to see the effects of that inflation right away, like you would when the economy is kind of roaring and booming and everyone's spending money and going out shopping and whatnot. So we're really seeing a lag in that inflation. We're talking about like consumer price inflation. I think it was like 6.8% the last time we talked about it. And
that's what they're telling us it is, right?
Of course, and I'm, to be quite frank, I'm more on the side of like Max Kaiser, who's saying it's probably anywhere, in the ballpark of 10 to 15%, probably leaning more towards that 15%. Because again, there's a lot of ways that the Fed kind of puts out these numbers to, in my opinion, misrepresent, possibly intentionally, what that actual inflation rate is, because they're including things that, the average everyday person is not buying, right? Like when we talk about inflation, I want to know how much are my groceries going to cost? How much is my gas going to cost, right? The necessities, toilet paper, like we saw last year.
Cars too, right?
Exactly. And so when we have that velocity of money kind of depressed by, this kind of artificial wartime economy, that causes that lag. And so I think, this is likely to kind of continue. And the intention of the Fed here by starting this tapering and kind of saying, hey, we're intending to raise the rates here, I think the intention is to head off that inflation. So what do you think? I mean, do you think it's actually going to work this time, or do you think it's going to be too little too late?
Well, I mean, so here's the thing, right? Like they've printed we literally had this exact conversation like 6 months ago. And I don't know what the number is now, all right, but back then it was somewhere between 40 to 60% of all US dollars in existence had been printed in the last 365 days from when we had said that, right?
Yep.
Could be closer to 70, 80% maybe now. I mean, I don't know, right?
Yeah, we don't know, because there's never, to my understanding, been a full audit of the Fed to tell us
No.
how much money they've printed, or even how much money they've printed at any one time, and so there's a lot of kind of trickery there going on. Like, for instance, they try to explain some of this away by saying, oh, well, we've changed the definition of the money stock that's in circulation by basically taking, because there's M1 money, which, and these are economics kind of nerdy terms, if you will, but M1 money would be like cash in our checking accounts, cash in our pockets, the stuff that we're using to spend on going out to eat every day. But then there's M2, which is like your savings account. And we all know, like, I mean, who even uses a savings account at a bank anymore? Because the rates that were given, it's like, what, 0.01%, some ludicrously low number. And then on top of that, like, up until just recently, you were only allowed to do a certain number of withdrawals from the savings account. But now they've lifted most of those regulations. And so they're saying, oh, well, we'll just include the M2 in the M1 and say, well, that's why the money supply has increased. And I call BS on that. It's just not true. It's a misrepresentation, and it disingenuously tricks people who are not experienced and knowledgeable on macroeconomics as to what's the reality, what's really going on here.
Yeah, dude, 100% agree. Do I think that it's gonna work this time? I mean, so did it work in 2008? Not really, right?
It kicked the can down the road.
Yeah. And the thing is, and dude, a lot of people, this is one of those kind of topics that people will say on YouTube. They'll say what I'm about to say, but they kind of don't 100% say it all the way. But it's kind of an infallible fact now at this point, because the way that our monetary system is just set up, that there's really just two options here, right? One, they can just continue to print money into oblivion. And they're really just like you're putting a Band-Aid on top of a Band-Aid on top of a Band-Aid. But the thing is, let's just pretend that Band-Aid has spikes on it and it actually makes the cut worse. The two is we go to a total deflationary collapse, and people would have to everything would just have to get kind of screwed up for probably 10 years. Which that second option, that's what would actually work, right? That probably the only thing that would work, except no politician is going to run for office with the preface that hey, I know these other guys, they're giving you guys free stuff and they keep printing all this money and inflating all the assets that you guys have and yada yada yada. But what I'm going to do is I'm going to just cut everything, and it's going to be a really tough decade, but we're going to have long-term happiness with this, right? So those are the only two options, and I don't know if these people are going to be able to do either one, really, right? Because can they keep just printing? Can they?
Well, and that's the question, right? So the reality is this: I shout out to John MLD. He mentioned this on the Tokyo Crypto Show. I want to say it was last week's, and it's a very, very poignant example here. If you have these politicians and they're only elected for a certain period of time, it becomes sort of a game of musical chairs, if you will, or hot potatoes, probably a better way of describing it, because we know that eventually this house of cards cannot continue to support putting more and more money printing on top of it. And we do need that, we do need that proper market correction. And this all started in 2008. We decided that we were going to bail out the banks, too big to fail, that whole narrative that played out. And we have only doubled down on those same poor decision-making that was going on then. And this right now, what we see is simply another example of that. It's trying to essentially cover up those tracks. It's trying to kind of prolong the ability of the system to kind of support all of this cheap debt. And the reality is if you're an elected official, why on earth would you campaign on that? To campaign to say, hey, I'm going to plunge us into a Great Depression of some variety,
right?
On a very large scale. Yeah, you're not going to win. It's not a realistic proposition. So instead, everyone seems to kind of be pushing these policies that simply kick the can, hoping, oh God, I hope this system can continue to go for longer than I'm going to be in office, and then I'm not going to be blamed for it. I maintain my legacy as a politician. And I think it's sad, really.
Yeah, and then I guess also at the same time, like if they got kind of like, what they wanted out of the situation, wink, wink, then, they're good and they don't have to worry about anyone else, right? Let me take a second, get caught up with the chat. T-Man Scott says, happy Friday, Super Cutters. Yes,
Happy
Friday.
Friday.
T-Man Scott. Kyle W says, Kyle saying yes. Tom D says, Saturday, Arvo looking good. Clay Buster says, good evening, Greg B. Cool. Yes, Greg B is indeed mucho cool. Harry Zico says, boom, baby. Yes, boom, baby. Eric G says, shoo. Harry says, I love Susan W. Yeah, for sure. Know your worth. What's up, dude? Says, welcome, Greg, and salutations, Josh. Good to see you in here. Solo says, ETH/BTC end of year. You want to answer that, Greg?
Oh, price predictions. Honestly, and again, this isn't financial advice. Please don't act on this. I know right now everyone's kind of nervous about what's going on. My prediction, frankly, is more sideways chopping. I mean, obviously we came down a little bit today. I haven't had a chance to look at the charts in the last few hours, but I do expect that we're probably going to see more sideways movement, at least for the next 2 weeks, if not a whole nother month to a month and a half. But we'll see how that plays out. As Charlie's mentioned on the Cultivate Crypto show, in the last couple of days, we really want to see that close above 53K for Bitcoin, in that January 3rd through 6th range, right in the halfway point of this current cycle that we're in, to really kind of solidify that continued bull trend. If we don't get that, then we're probably looking at more sideways chop or even retesting of those lower levels in the low 40s again, and possibly even down to the 30s. So, but just as a side note, none of these indicators are showing us that the bull market's over right now. I don't think it is. We don't have any of that stuff that happened in 2017 occurring now. And this is good. It's good for, it's good for longer lengthening cycles theory. It's good for a lot of folks who are just looking to get in and realizing that Bitcoin and Ethereum and crypto in general is a good inflation hedge. And if you believe that, right? I mean, I do personally. Again, not financial advice, but these would be these would be times where we can look at discounts.
Yeah, I would say 3 things about that. Like, first of all, when this happened in May, everyone was like freaking out. But I don't know about you, but that ended up being like some of the best 3 months of my life, right? So this is kind of like blessing in disguise, first and foremost. 2, I know this might sound kind of dumb or maybe crazy, but I don't really care. I think in my mind, like, if everyone is thinking, hey, all this is going to end at this date, in this year, then like chances are it's probably not going to end like that, right? Because what are the chances, right? And then 3, what was I going to say? Hold on. The third thing is, so dude, we were talking about people. We're talking about the velocity of money earlier, right?
Yes.
So it's obvious that they don't like blockchain-based digital assets. They don't like cryptocurrency. They don't like Bitcoin, right? I mean, I don't have to explain who they is. Like, you know what I'm talking about.
Yep.
Dude, people are keeping their money out of banks, right? Several reasons for that, right? Like more than we want to be able to probably say right now. But one of those things we know that people are keeping their money in outside of a bank is what? Crypto, right? So obviously me thinking to myself the other night, I'm like, well, they don't really necessarily want the thing to go. Let's just talk about Bitcoin. Like if it just rockets off to like $500,000, not saying it's to do that anytime in the near future, just using like an absurd number as an example. Like if it were to just do that, that signals to everybody like, hey, something's wrong here. Like, how did this thing just become that valuable? Normies don't understand like the purpose of Bitcoin, why it was built, right? What gives it like its certain value. But that would definitely make people like think about it, right? They'd be like, well, I had this money in my bank account. I could have just like bought that and like, I could actually pay my rent that month or whatever, right?
Yep.
But dude, what if everyone just like cashed out of crypto and just started spending all that money? Then wouldn't that in theory increase the velocity of money?
Yes, and that's I think why the situation that we're in with the certain sickness that's kind of staying in the news and keeping people staying home, saving lives, etc. That's really kind of keeping that down. Now, if people started going out and they start spending, that's when we're going to really start to see that that inflation coming back. And I think, for that reason, I believe that's why we're starting to see outlets saying, "Oh, we're probably looking at this thing to continue for another few years, another 2 to 3 years or so." And that's, again, I view that very much as this kind of desperate attempt to keep depressing the velocity of money in an attempt to kick that can down the road, because maybe that next administration won't be the same team as this one that's in office right now. And then it can be, then when that inflation, kind of picks back up, because, the next administration may not decide to kind of keep this situation going. What you would see is you'd see naturally that velocity of money increase. I mean, folks down in Florida and Texas, they've been open, they've been, back to normal largely for better part of a year plus now. Now, if the rest of the country was to do that, we would definitely see people spending. We definitely see people, retail sales increasing. I mean, you saw those retail sales numbers that came in after Black Friday, way down, much lower than the expectations. And, when you start to reverse that trend, that's when that inflation is going to kick in. That's when the consequences of that money printing that we've been doing the last 2 years is going to really rear its ugly head. And I think there's a very strong motivating factor here to kind of move that out past the next election cycle. And that's just my 2 cents, just my speculation. But, where there is a motive, that's kind of, the place that I think people should be looking.
Yeah. But okay. All right. So then we already know that it would reflect very poorly on them if cryptocurrency just absolutely rocket launched, right? So they can't necessarily have that, right? But at the same time, I mean, dude, I'm willing to bet a lot more of American money is locked up into crypto than what people think. And what do we know about people that have been into this for a while? Like they hold on for dear life, right? They're not going to sell at like an extreme loss.
Yeah.
So if they keep those prices tampered down, people are going to continue to buy, right? And not sell. And if the prices, if they let the prices go up, then people are going to sell. And then boom, that money, I don't know, someone go like 10 guys, maybe not that we know personally, but just start buying Lamborghinis and stuff, right? Like that, that would be bad as well, right? So that's like, they're kind of like, as far as like with crypto and all assets, really homes too and everything, they're kind of screwed whether or not how much they can push it up and down with their words, right? Would you agree or disagree with that?
Absolutely. I mean, like I said earlier, it's they really are kind of backing themselves into a corner here and making it to a point where, like I said, it's kind of like that game of chicken or hot potato or musical chairs, if you will. It's a matter of probably when rather than if. We can look at history like the Weimar Republic of Germany, Zimbabwe recently. I mean, for God's sakes, this is going on right today as we speak. Like if we look at Turkey, the Turkish lira. I mean, this is today. We can watch financial systems collapse in real time. I think the Turkish government was saying they're going to drastically raise the minimum wage to try to, keep people afloat, despite the fact that the Turkish lira is losing value versus the US dollar versus other major currencies at an alarming rate, at an absolutely alarming rate. And it's impoverishing people. It's terrible. We've seen it in Venezuela. We've seen it in Iran. We've seen it in many other places as well, where, as their dollars, as they continue to print, as those dollars continue to lose value, it's absolutely devastating for the average everyday person. It's great for the rich people, right? They're holding assets. They're holding, real assets, hard assets, equipment, capital assets, things that appreciate as we print money because they're necessary, they're needed. But for God's sakes, like you've seen that Bloomberg article, I think it was, where they were like, oh, if the money is being inflated, it's a good thing because then, you can just spend your paycheck right away, which frankly, it's ludicrous advice for the average everyday person, right? Like they leave out the part like, oh, spend it right away. But what they don't say is you should be spending it on appreciable assets, things that are going to gain value with inflation, not go out and run and buy groceries,
Right. Because who the hell is going to get ahead? like you and me, we're a millennial. We were, dude, before cryptocurrency and digital assets, our generation was one of the most screwed financially, right? Because we got all the backdrop and the badness from, you know, the generation before us who did nothing but benefit from it. And we had nothing, right?
Yeah. And not to mention massive student loan debt, which ironically, actually, this is a kind of a, it's kind of a good thing actually for the folks that are holding student loan debt, because assuming that those folks can stay afloat and actually continue to be able to service that debt over time, when we print money becomes the debt actually becomes worth less, because by natural, kind of ways that the economy works, as prices of everything increase, in order to keep stability within the economy, the wages will have to increase as well. But as we know, the wages always lag these things. And so there's going to be a period of pain. But for those that can actually continue to service those debts, over time, it's going to become, easier and easier to pay as those wages start to catch up with inflation. Now, if we get a deflationary spiral, right, as you kind of had mentioned there, because that's the other side of these theories as well, is that we don't get infinite inflation, that at some point we hit a wall and it kind of starts to deflate. That would be bad, So it's not the best to carry around a bunch of debt, but there is a little light at the end of that tunnel there as a result of that inflation for the folks that can play that correctly. And it's sad that, CNBC and Bloomberg and these different organizations, they give people a little nugget of truth, but they leave out those important parts that are in my opinion, the keys of how to do this correctly and the ways to kind of, get a leg up. And I mean, that's what we're here for crypto. That's why everyone's in crypto right now, is 100%. They see it as a way to get a leg up, to get out of their student loan debt, to be able to purchase a house. I mean, that's most people's goal at this point. It's the classic millennial struggle, if you will.
I sold my house, but to do the opposite. But hey, I do plan on getting a new one in the future, though, for sure. If it wasn't in New Orleans, things would be different, right? Yeah. But yeah, dude, totally echo on everything that you said. Cody Moose says, "Oh shit, Greg is in the house." Yes, he is.
What's up, Cody? Shout out to Cody.
He is. Two legends. Thank you. BS Thank Shadow Games. What is BS Shadow Games? I guess all of it is. Nonstop Dre 360 says, you mentioned M1, M2, etc. How many M insert number here are they? I think there's M1, 2, 3, and 4. Right? Yeah,
it's been many years since I've taken macro econ. So I know there are some others, but basically the long and short of it is, the higher you go up in those numbers, the less liquid that money actually is, the less ability of it to kind of go out back into the economy. So it's not readily spendable. It might be in the form of, assets via equities or bonds or stocks or treasury bills and things like that. So those would be in those higher numbers, but less liquid, so less relevant in the discussion of the velocity of money, because there's more steps involved to liquidate those assets to get that money back into the M1 and M2 money stock. So, I don't know offhand, but I'm sure someone
I don't even know
figure it out.
Yeah, that's a simple Google search, but I'm pretty sure that there is 4. But dude, I mean, does it really even matter anymore if they keep changing the definitions for these things? And also, didn't they recently remove the M1 money supply off of their own website?
Oh, yeah. So that's the St. Louis Fed. I believe they've stopped updating that chart because it basically just looked like, basically a straight line up, and a parabolic increase in the supply of money. And we know that's going to have consequences. The only people that I think don't are the folks who are maybe not aware of what that means, and it's right. It's something that people should familiarize themselves with, because this is going to be something that'll affect us for, the next few decades, at least, in my opinion.
Yep. Nonstop Dre 360 also says, realistically, what would normies do if they know about the Fed? Well, dude, honestly, bro, I don't know if you've heard me say this before on my stream, but like, I know people who are like friends of mine from back at home who like buy crypto just because number go up, right? And they don't even know like what the Fed is at all. So,
but they know the effects of what the Fed does, with this money printing, with the adding to the balance sheets, with the the monetary and fiscal policy that's kind of enacted upon us in such a way as to kind of benefit those that are already in power and those that are already kind of wealthy. I mean, we are living through arguably the largest transfer of wealth from the average everyday person to the uber wealthy And not to sound like a socialist or what have you, but I mean, this is a problem. The
Yeah.
kind of the hallmark of a healthy society is having a robust, strong middle class, and a lot of people that are not in poverty, and a kind of a small ruling class that has more money, and that gap has shrunk, and it's become a chasm. I mean, there isn't really much of a middle class left anymore. It's a batch of people that have grown billions upon billions of dollars richer during these last 2 years, and then a big batch of people that are struggling to get by, and that's it's very sad to see.
Yeah, and like Maslow's hierarchy of needs, like if you can't afford food, clothing, and shelter because you're working like 80 hours a week,
Yeah.
and maybe you have a degree, and maybe you have a normal, like what 10 years ago would have been considered a prestigious job, and you can't even afford, like, I don't know, rent, car insurance. So then maybe you can't afford your car note. You can't even drive to work anymore. And people can't, and you can't go to work, and you can't pay for your rent, and you got to move in back in with your mom and dad. Like, dude, that's not good for society, because then nobody has basic necessities, right? And they have to go to like, criminal mode and like do what is needed to do to survive, right? Which I think we're seeing a lot of rise of crime as well, right?
Oh yeah, majorly. And then you couple this with some of these laws that they're looking to pass. I mean, the surveillance of people's money that's coming in. Forcing like organizations like Cash App or Venmo to start reporting anything over $600 of transactions. I mean, right now, I want to say it's like they didn't have to previously 1099 folks unless they were over $20,000 that year. And I want to say it's like 200 transactions. Now it's just if you received $600 or more,
which is
now
insane,
it's
getting,
dude. Yeah. I mean, that
insane.
we're talking, they're trying to come for taxes on like, money that your grandma sent you or money that you made from a garage sale. I mean, it's lunacy, frankly. It's like, oh, we're going to go after the people who you've already kicked for the last 2 years. And now you're going to try to, come after them for the pocket change and the couch cushion money. I don't see how that's a solution to this.
There's either an air of disparity to that, or it's almost as if they want everyone to, I don't know, own nothing and be happy, right?
Yep. Absolutely.
St. Chocolate says nothing in response to what normies do if they knew about the Fed.
Nothing. Yeah, probably.
Know Your Worth says May was a baptism by fire for me. Good, man. Good. I think it was for a lot of people. Tom D says earning yield this year on crypto assets, still earning more than if I left cash in the bank, regardless of crypto price action. Yeah. Which is insane. And speaking of, one of the biggest topics we haven't actually drilled into a lot tonight is the blockchain and just all this whole entire different world, Web3, the entire ecosystem that like is kind of, if you make the choice, you can technically say, I don't really want to, let's just say this, like the example I gave earlier of a person who has like a prestigious job, maybe had to get a degree to get that job,
right.
But is having a hard time staying afloat, and they're doing all this stuff with money, or they're doing all this stuff they can't afford because they're not getting enough money. And they say to themselves, well, I keep hearing about all this kind of stuff. And that I did buy that like one Ethereum that one time, and I have like an extra like $4,000 that I didn't have before. And they decide like, maybe I can just go and participate in this system. And then when I need to go pay bills, I can, reap some of my yield out of it and then go and pay. Do you think that the Fed meeting is going to have any effect on that, whether positive or negative, or do you think that was just like them trying to like calm people down? Because, dude, I think it's happening a lot, man. Like people are, what was it, like 3 or 4% of people that quit their jobs in 2021 stated from that survey? Did you see that?
I saw. There may be some sampling bias there, just because of the crypto people being a little bit more activist out there. So it's probably not actually 4% of workers.
There's no way, dude. There's no way.
Yeah, there's just no way. There's not that many people in it yet. But I mean, you never know. There's obviously more people that were in it than before, right? Than what we saw in like 2017's bull market, the one prior to this. But I mean, it's It's definitely increasing. There's definitely more people getting into it. They see the benefits of it. I mean, as we point out here, it's you could savings account 0.01% interest, or you
Yeah.
could go
What the
to
hell?
literally any kind of decentralized finance protocol. I mean, even Coinbase gives I think a fairly competitive to the
Sure.
regular banks, and that's a centralized exchange that a lot of people complain about
Yeah.
constantly. But there's plenty of yield out there. I mean, people are getting anywhere from 10 to 30% on fairly safe levels of exposure out there in the market. I mean, safe relative to the rest of crypto, right?
Yeah. Dude, you know what's funny? The other day, I was walking my dog and my neighbor came and stopped me on my bike, or on his bike, sorry. And I don't know this guy by first name. I've just seen him around.
Yeah.
But he is friends with another neighbor that I have that I actually know, who's like big into crypto. He's like, "Hey dude, you do like blockchain development and stuff, right?" And I was like, "Yeah." He was like, "Do you know anything about the platform Celsius?" And I was like, "Yeah, I've used them before." And he was like, "Man, he's like, I have all this cash sitting in the bank, and I'm like really considering just like putting it on to Celsius because like 10% APY." He's like, "That's insane." He's like, is that a scam or something like that?" I was like, "No, I was like, I mean, some people will say some things about the Celsius platform based off of like, you know, things that are unrelated to does that platform work or not." But I was like,
Sure.
you can actually get 10% on there and you can just pull it out whenever you want. And he was like, "There's no catch." And I was like, "Not really, dude." And he was like, "How does that work?" And I was like, basically the same way that banks make money from you giving them your money. They like take that and just invert it and give that to the people who are putting their money in there instead. And he's like,
Yeah.
that is nuts. He's like, I'm actually going to take like almost all my money at my bank and put it into Celsius. And I was like, "Yeah, go for it, I guess."
Yeah, and I think it's important to point out, obviously doing that in crypto, it's kind of a disservice to folks to have them not realize that there is some risk there, right? Because when we talk
For
about
sure.
platform, when we talk, and don't get me wrong, full disclosure, I am a customer of Celsius right now. I do like the company. That there has been some problems with that lately. There's the investigation of their CFO or CRO, for dealings outside the company. There was, of course, the Badger DAO hack that exposed the treasury of theirs to some significant losses. But when we talk about a $30 to $60 billion assets under management company, I mean, that is not really a significant portion of it. They have continued to pay out the weekly interest to their customers diligently. There's never been any problems with that. But I like to, from a risk management perspective, I like to, tell people, not financial advice, just be careful with that. Don't put all of your eggs in any one basket. And that goes for everything. We don't want to be only in real estate. We don't want to be only in precious metals. Celsius or BlockFi or any of these other yield bearing types of, I call that the easy yield, if you will, where it's just basically like buying US dollar coin, buying Tether, putting in those accounts and letting it sit for interest. Fairly safe compared to, going into liquidity pools or yield farming or these other types of things. Can you make more money? Can you make more yield doing those things yourself? Absolutely. But a lot of people will give up. Oh yeah. But a lot of people will give up that extra, chunk of interest for the sake of convenience, for being able to say it's in one place.
Right.
I don't have to deal with it. I don't have to manage it. It's just there. They pay me every week, and a lot of it's very attractive. It feels like a bank for your average everyday person. I've onboarded a number of people into crypto just by saying, "Hey, if you're just getting started, plug some money in here, see that you can earn some yield." And then of course they get interested in Bitcoin and Ethereum and everything else, and they start to go down the crypto rabbit hole. So it's a good way to start.
Yeah, man, exactly. But I think so we just said it without actually even saying it, but about this comment earlier, dude, like even random people, like the guy literally came to me off the street, even random people now, like just normies and older people too. My dad uses Celsius because I recommended him to, like, a couple months back. Like
Sure, yeah.
all they know is like, "Hey, I have this cash in bank, like as far as they know, getting devalued, right? Yep. And I can either put that into like a stable coin and put it on like something of Celsius. All they have to do is like press a couple buttons, and then they're making like they're at least making 10%, right, return on their cash. And so that's why like that whole other world out there, I don't really see it going away anytime soon, dude. Like, even if, things got like really bad, like the fact that this tech already exists, it's out there on a decentralized ledger-based network that, I mean, we could say like outlying like arguments here, but like it would take a lot for all of that to just poof, right? Even if some malicious actors wanted to get rid of it, right?
Well, I mean, how many times has China said they're going to ban crypto? How many times has Russia said they're going to ban crypto? It's become a running joke in the crypto communities at this point, because it's like, oh, look, China's banning crypto for the 50th time this year now. It's to a degree, it's probably just market manipulation, but that does kind of scare away some of the folks who are just getting in and maybe don't realize that this stuff occurs more often than I think. Than I think it warrants. So. And again, this I think is it's calls of desperation from the kind of crumbling old financial system, and we're starting to see the advent of as you mentioned, like Web 3.0, decentralization via crypto. These kind of what is sound money. Like Bitcoin, there can only ever be 21 million. Now there's 90-something% of the supply out. You're going to start to see that becoming harder and harder to make those additional Bitcoin to reach that 21 million mark, and so when we look at that ledger, we can look at it. We can say, okay, show me that there's 21 million Bitcoin. We can pull up the block explorer. We can see that is the case, and we can see that there's not more of it being created. And so that's going to be a very much more sound store of value than any of these fiat currencies where it's a black box and they're printing money and giving it to banks and giving it to massive organizations, and we have no visibility into what that is. I mean, if you were to the running joke is you see those making its way around Facebook where it compares like Dogecoin to a mystery crypto, and then it turns out the mystery crypto is the US dollar, and it proves the point that even Dogecoin in a lot of ways almost looks like a better store of value than that. And that's a scary thought, and I think once Dogecoin hits $1, and I think it could eventually, especially if the power of memes that seems to run crypto continues, it's going to be a very, very bizarre day when the meme coin that's been around for only a decade or so here is starting to outpace the dollar. I mean, that's a profound thing to ponder.
It definitely reflects upon a couple of things, right? Dude, do you remember 6 months ago when we had that exact conversation? I think I said something like, we know that the dollar is like basically worthless when one Dogecoin equals $1.01, right? Like anything over $1.
Right.
Remember that?
Yep.
Man.
Yep.
Know Your Worth also says CNN calls it a P-endemic blizzard. What, could you clarify, Mr. Know Your Worth? Don't know what exactly you're saying. Maybe Greg does, though. Know Your Worth says, I'm in Fort Worth now doing reconnaissance. I really like it so far. Oh, that's all right. I remember you were going to go some places and check it out. Yeah, dude, check it out. And it seems like you like it. But don't forget to go to like more than one place, right? Make sure, you don't get stuck somewhere. Tom D also says Turkey is a shit show. Yeah, I actually know somebody that I used to do business with in Turkey. And he is like, he was one of those people that probably would have had nothing to do with Bitcoin. And he is like, he's all into it now, dude, because his money is like worthless over there now, right?
It forces people into something else that's going to hold value. Doesn't matter what it is, even at this point. It's just like, holy crap, the money is failing. We have to get out of the money. I don't want to be holding it. I mean, look at Europe. There's places where you have negative interest rates. Like if you have over $100,000, I want to say it's like the Netherlands or something, or Switzerland or Sweden, one of those countries. I mean, they basically are taking money from your account, without even asking.
Yeah, dude.
You have money, so we're going to take it. I mean, that's beyond crazy. That's just directly theft, straight up.
Yes, I agree. Nasib Rail says, if America starts a war with China, how do you think it will affect the USD and crypto? You want to answer that?
Yeah, I mean, it's hard to say, right? Because we are kind of in, as cliche as it has become, we are in unprecedented times when it comes to the monetary system. But we can look at history, and history shows us that, if we can get that kind of unifying force of a war behind us, it does tend to kind of bolster the economy a little bit. But, as we've moved away from kind of nationalism and more into a global economy, it's anybody's guess how that might play out, right? Because the United States dollar being kind of the default currency that people transact in. I mean, you see Russia and China looking to get out of the SWIFT banking system, the kind of way that money is transferred between different countries. That's not so good for the dollar. And I think, we're starting to see that crumbling of dollar dominance internationally. And, the Fed, the United States, they have a very vested interest in kind of keeping that the dominant thing. So this demand that, oh, hey, we're going to kick Russia off of the SWIFT system. I mean, that's kind of shooting ourselves in the foot if we want to maintain dollar hegemony internationally. So it's going to be interesting. Now, as for how that will affect crypto, I mean, the reality is when we talk about actual war, if that was to break out like a hot war,
not a proxy war. Say, like, what I would ask is, like, is it going to be on our doorstep or what? Because I think if it wasn't and it's just kind of normal here, kind of sort of, then I think that would probably make less of a negative impact than if it was like at our front door, right?
Right, exactly. Like if it's on our front door and it's a hot war and there's really major problems and such, I mean, you can't eat Bitcoin. You can't eat US dollars. I mean, at that point, people are going to be looking for those necessities. They're going to be, oh my God, I got to go run out to the Costco or the Publix and get more toilet paper. It's going to be that all over again. Because again, people won't want to hold dollars and that will trickle down into crypto as well. But again, look at history. What was the smart money doing? What were the wealthy doing during these times of conflict? They were acquiring more property. They were acquiring more gold. They were acquiring more silver and assets and these hard assets that will maintain value. Because even if they're down, we say it all the time: buy the dip, BTFD, right? And and that couldn't be more true, because you have to lean into that kind of counterintuitive way of thinking. It's like when everybody is panicking and selling, I'm like, sweet, it's my time to get some discounts on these things,
Yeah, man. Know Your Worth says, I sold my house and my car too. Japan is struggling with student loans too. I had no idea. Matt W, what's up, dude? Says, what is up, studs? USA would defeat China handily in a hypothetical war. China lacks experience. Their Air Force has no aces. They've only ever fought their own citizens. That's a good point too. That, I don't know. I mean, I don't know who'd win. I certainly wouldn't want to fight in any type of. I certainly wouldn't want to be anyone's pawn in a war. The only time I would go out of my way to do that is if someone was knocking on my doorstep, right?
Exactly.
I think you probably feel the same.
Yep. I got no interest in fighting on behalf of some globalists. No, thank you.
Sorry. Yep. No, thank you. This is a good one, dude. How would you guys solve the current economic situation of the U.S. dollar?
Sound money. Yep. No, we would have to either, and I don't know if that looks like the gold standard or a Bitcoin standard or something, but the answer is to stop printing money, and that's going to be a painful transition. It's going to be we talk about resetting things, and it's not going to be a clean process. It's not going to be an easy thing to go through for anybody involved. But to untie what we've built here, it's not an easy task. But yeah, I mean, the simple answer, to kind of address the question is, we cannot keep printing money. We have to base our monetary system on something stable, on something finite, right? That's the whole purpose of Bitcoin, that 21 million, because what is money? Money is simply a store of value. And even more simply, it is a store of our own labor, right? We work hours and hours and hours to acquire this currency. Why? Because we need something that is a way to trade between ourselves. If we go way back, right, we have barter, where we're just trading like, okay, I'll give you the sandwich and then you give me some bottle of water or whatever, right? We need something to hold value in the intermediary, because of course that allows the economy to actually function smoothly rather than this kind of stop and go of barter. And it needs to be sound money. It needs to be sound money so that we're not, stealthily taxing people out of their hard-earned labor. I mean, it's insulting, frankly, for the governments to be doing this. And then on top of that saying, well, we're not going to let you audit us. We're not going to tell you how much we printed or how much we gave to our friends in banking and the preferred, groups in the private sector.
Mm-hmm. Of course, only in a video game, right? Because our government would never do that. Yeah, you know what, dude? What you said is really important. The fact that money is, you could consider it your time, right? That you could actually consider that to be your life force energy. As like cheesy and dumb as that sounds, how much of your life and your energy and your time has gone into, if you're one of those people out there that works a conventional job or just works any kind of job, period, that you get paid for.
It's a quarter to a third of your entire life, 8 hours a day, every day, roughly for many, many years, a quarter to a third of your life. So it's really important that, you're able to store that value over time and even, gain value on behalf of that via assets, via, whatever.
Yes. And if it's depreciating in value because of someone's no fault of your own, then like what happens is they're basically like, this is going to sound like awful, but they're basically getting killed faster, right? They're dying fast. Someone's taking your life away faster. So it's probably like you said, it's insulting. It's the most insulting thing that someone could do to a human being. And like, so many normal people don't understand what's actually going on. They're having their life stolen from them, right?
It's indirect slavery in a way. They're taking your labor and they're pulling it out from under you. And then you're able to buy less. You're able to get less. Because, the whole point of a capitalist system is to delay gratification, to be able to sit and say, okay, I'm going to save this up so I can do something great with it, so I can build a legacy, so I can build a company, like what you and I are working on, what all of us are working on in the crypto space, trying to build something new, something that doesn't exist, something that generates value and the ability for folks to actually do something with their labor. That's not just, trading, labor and time for basic necessities. Right. And when you print more money, when you take that away from people, you end up with those articles like, oh, you better spend your paycheck right away because, we're going to keep printing money. That's not a way to go forward. We need sound money.
No. And my answer would be the same as yours. Like, where did this all start from when we came off the gold standard, really? It started kind of before that, but it got worse when that happened, right? So I think the only option is we actually do need to have things need to be reset, and it needs to be reset, and everything would have to be based off of like sound money, which again, that's a new term that people didn't even like exist a couple of years ago, right? Yep. So, or at least a decade ago. Eli says, based content, guys. Thank you very much. Do you guys think China is secretly getting as much crypto as possible? I don't know if it's secret because, it's a pretty well-known fact that the Chinese government, people know the Chinese government's Bitcoin address. They have quite a bit. Are they buying? I don't know. I wouldn't be surprised, right? Like, look.
Well, they're definitely mining it. And countries are involved now. El Salvador legalizing it as their kind of official currency, if you will. Miami, the mayor's like, I want people to be able to pay their taxes in crypto. So it's whether or not the central banks like it, crypto is probably here to stay. People want it. People need it. It's a store of value. It's new. It's unique. And, we can see the hustling and bustling of the legislators trying to kind of get their hands around it. And by that, tax it and try to, ruin the value that it has even now.
Yeah. And I wouldn't be so surprised if the central banks were also not buying and accumulating it too, because they did it with gold before in the past, right? They're like, don't buy it. It's awful. Meanwhile, they were buying as much gold as they possibly could, right?
Yep, absolutely.
I'm going to check out Florida. Okay, good. Patricio says, one good thing of living on my second world country is that there is no crypto regulation or taxes. Yes, Patricio. That is beautiful. I'm jealous of you for that.
Yep.
Irons Force says yes. JB says Greg B making a name for himself. Yes, indeed. Mr. Greg B is definitely the man. Nick also says Greg. We based our monetary system based on printing money slower than everyone else. Elijah Cohen says, hey, Greg, how's it going? Long time no see.
Shout out to Elijah. Hope you're doing well out there, brother.
St. Chocolate says the Bitcoin Standard is a must read. Yeah, that is a very good book. Sam Pacinski says boom. Golden handcuff slavery. That's all working is whenever you get paid. Any other time, it's just a hobby. Yeah, that's true, man. That's why the fact that all this is like happening. Dude, it really is kind of sad, right? It's sad that people don't know, but we have blockchain technology, specifically decentralized blockchain technology.
Yeah.
And all these things are like Tom was talking about earlier on the chat. Like, I'm not saying to go use like Wonderland or anything like that, but I mean, like, dude, when you have some kind of protocol that you could just like put money in and you could stake it and then get APY, get regular interest that to most people, to us, it wouldn't seem crazy, but to most people would seem insane. And you could just like pay your rent with that. People are going to be like, why am I killing myself, literally losing my life to go and work a job that most people probably don't want to work, to get money that they're supposed to be storing their life force and their life energy in, that's just going away, right?
Yep, absolutely. That's the draw of it, you know? I mean, that 10% on Celsius that they got right now, and that 15-20% that we see out in DeFi, I mean, that's when people realize that that's a real thing. I mean, that is extremely attractive. It's extremely attractive. I mean, you don't even see those levels of interest in APY generally even in a 401k or an IRA. You know, you have to be kind of almost an insider. You have to be doing like private banking and whatnot to even get close to those kind of rates, you know. And so this is a way that, you know, the kind of average everyday person is able to access those, you know, those levels of passive income, that really can actually pay bills and actually buy them things and increase the value of their money. Now, granted, if the inflation is at like 15% and you're only earning 10% yield on your money, you're still not getting ahead, but you're doing a hell of a lot better than the folks who are just, you know, having their money in a checking account and losing value by the day, you know. So we got to do everything that we can to stay ahead of that inflation if we even want to maintain the standard of living that we have today.
Agreed. Nonstop Dre asks, what would realistically happen if all first world countries made Bitcoin the new gold standard? You want to answer this one too?
Well, I don't think it's possible right away, first of all, because there's too many vested interests. There's too much going on. There's too many processes and systems in motion already that could not facilitate that. But if theoretically, if you were to snap your fingers and make that occur, I mean, what you would end up happen is you would have people able to much more readily store value, much more readily have that sound money. And it would take a lot of the power away from the folks who, you know, to this day, the central bankers, right, that are able to print money. If they weren't able to do that, you know, then they actually would need to be out there working and doing things. You know, you wouldn't see career politicians that are just infinite, you know, draws on the system that don't actually contribute anything. You know, you'd see a lot less of that. Now, the extreme end of that, of course, is that the economy would completely stagnate because there's no inflation, so your velocity of money would slow down, right? Like the kind of the crypto citadel, you know, that video, you know, and that's or the Bitcoin time traveler. You know, if you guys go and look that one up, it's you know, it's kind of it's a little campy and it's a little ridiculous and it's a few years old now, but you know, you could see something like that happening where the economy begins to stagnate and there's no incentive for anyone to do any investing because there's no inflation, right? So that's why we have this, you know, this crypto space that's not just Bitcoin with 21 million. I mean, and it's important to note too, like Ethereum, right? With the Ethereum Improvement Protocol, EIP 1559, you know, so they've introduced burning to it. So now it's not just an inflationary currency; it's both inflationary and deflationary, depending on, you know, what the market activity looks like. You know, so it can kind of go either way, and it depends on how the blockchain is particularly set up. So each of these different blockchains that's out there has different kind of ways of what the circulating supply is, what the inflation looks like on that, and so there's definitely room in the space, and I think it's healthy to have multiple options that do different things out there. So not just Bitcoin, you know. And if it went to just Bitcoin, yeah, I'd be worried about stagnation.
Yeah, and I guess, you know, there's still Bitcoin is still inflationary, but like it's by the it's the most like minuscule amount now, right? Like we already have 90% of it out there. But
at some point it stops, you know, and so like currently it's slightly inflationary, but yes, eventually it won't be anymore.
Right. I couldn't realistically see that working past like the year 2140, right? Because like I think theoretically actually that would probably be the best thing for the next 100 years. Honest to God, like one Satoshi could be like used as $1. And that will work for 100 years, right? But then that 100 years, we'd have to change, something else would change again. Like none of this stuff, and just the way that we, like society is in general, like we're never going back to, you know, like ancient Mesopotamia to where like there's only in this area, there's like a finite amount of gold, but they know that there's all this other parts of the world that's unexplored. We have all this other extra gold. There's all like, there was no like dollar per se. Yeah. I mean, maybe there was, but they certainly weren't like printing money at insane rates at that point in time. Right. So what we would have to do is, you know, we could do that. It could work. And then as time goes on, we would have to engineer new solutions to these problems. It's just at least with that happening though, we have already been able to learn from we already had learned some good lessons. Right. Exactly. So, but I would say though, to this question that I think there's way too many people, like, I don't think that could work like right now because there's way too many people, countries, companies that are holding big bags of like Bitcoin and they're not going to be willing to give it up. And that disbursement of it would be required for that to take place. Right. And they're going to be like, no, I'm not giving that up. Sorry.
Right. Well, look at the feudal Middle Ages. I mean, when you have a stagnating economy like that, you end up with a permanent serf class and a permanent ruling class that just owns all the property. And we see bits and pieces of this today, you know, in some of these Eastern Bloc countries, for example, you know, property ownership is out of reach for most people, but the rents are fairly cheap, you know, and they'll own nothing and they'll be happy, you know. And so we don't necessarily want no inflation. We don't necessarily want, you know, only one currency, right? We want options. We want different things. We want incentivization out there for people to continue to innovate, to continue to make changes. So, you know, I would encourage people, like, don't get in the habit of thinking that this is all permanent and that there's any one solution, because the reality is that things will change over time. Things will shift. There will be new developments, you know, like folks like you, Josh, that are doing blockchain development, you know, like there's lots of fascinating work happening in this space right now, like the decentralized autonomous organizations. I know we've been chatting in various groups about that. You know, there's the opportunities right now. I mean, NFTs, for example, the ability to, you know, have provenance of ownership of something within the blockchain. I mean, this is all in its infancy. So, you know, I look at it truly like the early days of the internet where, you know, 10, 15 years down the road, I think things will probably look considerably different than they do today. You know,
dude.
We'll be looked at as the kind of the pioneers of this system, assuming that, you know, this little experiment that we're running here that seems to be going quite well, assuming that continues. Yeah.
Man, we had some guy contact us today. I can't say who it is, obviously, but, and it's nobody that you or anyone else knows, but basically they want us, from my understanding, to help them tokenize rental lease agreements.
Yep.
So, I mean, more and more things. I mean, you know, Rio says, you know what? You guys are so on point. I had to come out of the shadows and comment, nice work on enlightening people. Thank you. Thank you very much. Sam says, they pretend to pay us. We pretend to work. Soviet worker motto.
Yes, sir.
Elijah says, exactly, with the interest that I've been gaining, I have not had to work for the past couple of months. Yeah, dude.
Beautiful.
That's good. Good for you. As a life coach economist said best, everyone is a whore. Rio says, if you want 50%, call Paul Volcker. He got big cojones and got the job done that no one else wants to do. What first world countries do you guys think would be the first one to integrate crypto into their economy, just like how gift cards are used? I mean, we're kind of already
there. Yeah, we're there. I mean, it's here. It's
America,
happening.
But at state by state, right? And another thing too is, I mean, this is completely different, an unrelated topic. I see this. I mean, we can already see this. We've already seen this happen in the last 2 years, right? But I think we're getting more and more like de-unionized per se, or maybe rather just closer to just a unionized version of different states, which was kind of the intention to begin with. And I would say, if you were to go by that perspective, and you're going to go state by state, you know, Florida, obviously. Texas. I mean, dude, you know, my home state, Louisiana, that I left, who I completely 100% disagree with all their anything and everything that has to do with their politics, right? But even like some like politicians from the state themselves wrote a paper that was like an ode to Satoshi, and they're like, we're going to keep Bitcoin on the state balance sheet. This is fucking Louisiana, dude. So like,
they know.
It's already happening. They know, dude. They know. NFTs are great. Sounds familiar. Spark 55 says, well, not all middle-aged economies stagnated. In fact, East Rome used gold, and in the initial decades of the empire, there was virtually no inflation, and they prospered. That's good, but I mean,
and it did come down eventually. All things come to an end. And that's what I'm saying. Like, nothing stays the same forever, and we have to keep that in mind. It's we might have that period of stagnation, but yes, things do end up changing because something has to give eventually. I mean, people are, humans. We have an inherent want and need to build legacy and to build and grow and create new things. And when folks see that they don't have the opportunity to do so, that's when you see the kind of the turnings, if you will.
Yeah. And, I mean, I'm sure that it's not an impossibility, but I mean, Rome is one of the biggest examples of like collapsing societies, right? And, like you said, nothing lasts forever. I think, like mentioned earlier, we learn from our lessons, and as time goes on, people are going to engineer solutions to this problem when it happens again, just like with Bitcoin, right?
Indeed, they will.
Imagine Florida and Texas use their own crypto to give the Fed the finger. Well, believe it or not, if you want to look into Miami coin, you're welcome to do so. Not saying to do it, but Snowman Mike says, so you're saying to take out a giant loan and buy all the Bitcoin? Well, Michael Saylor would say to do that. We're not saying to do anything.
Yeah, not financial advice. But yes, there is something to be said for utilizing the cheap debt that is out there, to be able to acquire those appreciable assets, whether that be crypto, whether that be property, whether that be, equipment that's used to build things. Those things have value. But again, you're making a bet that you're going to be, having that asset price increase and that you're going to be able to continue to service that debt. If you don't, that's where you get foreclosures. That's where you get, seizures of property to pay back whoever you borrowed that money from.
Right. Maybe a collateralized loan might not be the worst idea. Speaking of things that are part of the new and improved financial system, Justin S says, gold is done, in my opinion. Gold is too money as horse and buggy was to transport. Like, okay. So, I would agree in the sense that, like, literally what you just said, like the horse and buggy as compared to a car, right? Is gold still going to keep its value and like be used, and people are going to buy and sell it and use it for things like jewelry and electronics and all that kind of stuff? Of course, it's fucking gold, right? But yeah, as society moves on, humans have always gone towards technology, right? And then moving once they're into that technology to just continue to move forward, right? So I would think maybe that gold's biggest purpose would no longer kind of be like that hedge against inflation. It would just be, digital assets, or maybe a combination of both. People always argue like, well, what if power goes out for like months and months and months? Well, let's just say that does happen. Are people going to be carrying bags of gold around? Like, no. They're going to be trying to eat and,
exactly.
Yeah.
Exactly.
Miami has home rule powers, do things like that. Amish still use horse and buggy. Gold wallets have used, just not and electronics. Yeah. Not too sure about the other countries, says Rio. Precious metals is always going to be around. Yeah, for sure. Physical hard assets for rainy day. I mean, yeah, people make jewelry, dude. People are always going to want jewelry, right? So, All right, Greg. I think I got to head out soon. I think we got as much off our chest as we wanted to. We could have gone more probably into like the blockchain aspect of it, but I don't want to make this like, hey, look at all these like crazy degenerate things you can do. But the point is that
right.
Get the message out there that this stuff exists, right? And I mean, I think still not enough people know, right? Not enough people know, but more people know now than they did 2 years ago, right?
Absolutely. Yeah, and I think, what we talked about today it's very important, because this is kind of a primer for folks to kind of get an idea of what's going on in the background, what's happening with, with these financial institutions and why they're doing what they're doing. it's extremely important that people understand this, because it really will mean the difference between you being able to weather this kind of inflation storm, or if you're just going to get left behind, you know?
Yeah, exactly. And I don't think there's anything better that we can do other than to spread the word on it, right?
Yep.
Again, hashtag not financial advice, but one more comment over here, because this know your worth. Technology is the great disruptor. And this is also a good comment. Amen. Disruption of economies is good, since usually the creation of new economy far surpassed the older one every time throughout history. Yeah,
Yep.
I've talked about this on my streams. Know your worth. You've probably heard this on one of my streams before too. Like once we had the internet, no one's running back to the local library to go and find the information that they could just get from a Google search, right?
Yep.
So,
Yep.
And guys, if you guys do actually want to have some more help with this kind of stuff, Greg, you want to let people know where they can reach you at?
Sure. Yeah. So you guys can find me on cultivatecrypto.com/shop. You'll notice that I'm there on the Cultivate Crypto team doing consultations. So if you want to get more in depth with this, with the economy, with how this macro works, happy to discuss that. Obviously I cover cryptocurrency topics and the states of the markets and things. But yep, you guys can find me on there.
Solid. And also, guys, you already know, if you guys are interested in the development aspect of all this and blockchain tech in general, developerdirection.com. That's where you guys can go to get that stuff. Any final words, Greg?
Don't hold those dollars forever.
I would agree. Agree.
Try to stay afloat. Try to stay above that inflation line, because if you can, you're going to do very well in this this new burgeoning economy that's being built right under us.
Solid, man. Solid. Well, all right, guys, we're out. See ya.